Which of the following documents provides tailored terms for a specific investor? Keyword here is a specific investor. The limited partnership agreement is for everybody, right? An excusal right is a term that is used for an investor that wants to skip a capital call. But when we're looking for a document, it is a side letter, A. Identify the fee approach that most directly encourages private equity. So we're looking at private equity here. Fund managers to invest selectively, not just quickly. Management fees based on committed capital. Yes, because if you commit 10 million, the fees are based on the 10 million, which means the private equity fund manager doesn't have to race to invest all the money. But if you had paid on invested capital, and it took, let's say, 3 years to find all the good targets, the PE manager would say, well, my fee will increase the faster I draw down capital, might be motivated to invest much quicker and less selectively. Which performance fee modification grants limited partners the right to reclaim a portion of the general partner's performance fee? Catch-up clause, high water mark, or clawback provision? Well, if you are reclaiming a portion of the fee, you are clawing back, right? There's C. Which of the following features is most likely associated with an alternative investment rather than a traditional one? Illiquidity. And we're looking for most likely associated with an alternative investment. I mean, you can always think of a traditional investment like high yield fixed income is illiquid. But as a class, AI alternative investments will be more illiquid than traditional ones. So illiquidity. Smaller capital outlays, not really. For alternative assets, it's larger capital outlays. You can get rid of that. Shorter investment time horizons. Well, we know if you're tying money up in a private fund, you're 10 to 12 years. Get rid of that one. Assets developed through a public-private partnership typically involve, well, you have the public sector involved here. They're not going to get involved in private investments, right? But private funds will get involved in public projects. Long-lived fixed assets intended for public use kind of gives it away, right? Referring to the diagram above, identify the label A, B, or C that best corresponds to each of the following financial measures. Management fee, net return, and gross return. So, okay, at least it puts us on the page of what we're looking for here. Investment 1, investment 2, investment 3. There is A. Well, that must be the returns the investment generates for the funds. There is C. That must be the fees that the fund takes. And there is B, because we have investors down here. So A must be the gross return. B must be the net return. And C must be our management fee. There we are. Which of the following options is the most likely ranking of the alternative investment methods from most desirable to least for the following pension fund? A well-endowed university pension fund with significant in-house knowledge, so they do have in-house knowledge, skills and oversight capabilities to seeking alternative investments to diversify its existing asset portfolio and produce higher returns than more traditional investments while retaining as much control as possible. Well, we know they're going to start with direct investment. Then you move to co-investment, then fund investment. You retain the highest control with direct investment, and we are told they have significant in-house experience and they are well endowed. From the following options, identify the most important reason that investors in alternative funds compensate managers using a performance-based fee structure. And in the reading, we said that they do that so that they align interests, that the limited partners and the general partners have aligned interests. So that's what we're looking for. Penalize managers for poor declining performance over time. That would be a clawback provision. We can get rid of that. Better align manager and investor incentives over longer periods. There we go. Protect themselves from paying managers twice for the same return. That is a high watermark. B.